All right, good morning, everybody. So it continues this hurry up and wait. All lies on either the bill or the tariffs. One of those two likely to be the impact that finally rocks the dollar and the yields and shakes this market loose. We don't really have a bias for either the upside or the downside. The first blush, we'd say after going as high as we have, we need a break, but we don't have any short signals yet. So while it makes sense to plan for a short, we certainly don't have any signals to say we should take it. Markets are waiting this morning, kind of a mixed bag. Japan down the most, 0.75%. Hong Kong up the most at nearly 0.5%. We're in wait mode. There's some kind of big conference today with a lot of Fed heads from around the world. Not really expecting much out of that either. It's a big forum. They're just all going to be chipping teeth. There's not going to be any sort of policy. If you look at the numbers on any of the economic data we've got coming in, there's not any expectation of big discrepancies. So a headline number could shock and awe, but otherwise, if we hit the forecast, then there really shouldn't be any shenanigans. This is the forum that I had mentioned. Powell, Christine Lagarde, Andrew Bailey, Bank of Japan governor, they're all going to be on this panel later today. But I mean, really, while this could cause some real drama, it would very likely only happen on accident if they get taken out of context, inadvertently say something they didn't mean to say, something like that. ISM manufacturing at 10 o'clock. Keep your eye on that one. The numbers aren't very wide, but still, it's one that has caused issues before. And at the same time, at 10 o'clock, we've got other things, including jolts. If you're unfamiliar with this one, this is basically the take this job and shove it numbers. The idea that the grass is always greener somewhere else, and that if you was to leave the current job that you have, you feel like you could find another one relatively easy. That's the jolts numbers. If you remember back in 07 and 08, jobs were scarce. If you had one, you kept it because you knew that if you lost it, you would have a very hard time getting another one. The jolts numbers were radically different back then. Once we're through the 10 a.m. economic data, there's nothing else left on the agenda. So we're all going to continue to watch the headlines, looking for anything on the bill and or on tariffs. And right now, that is centered on Japan and Europe. Those are the two that are not capitulating at the moment. We got Secretary of Treasury Scott Bessent out there chipping teeth, going on about the rare earth magnet issue. Keep your eye on the auto space. They're the ones throwing a fit right now. They had to shut down some production facilities because they don't have these magnets. That's a pretty bold statement, but he said it, so keep your eye on it. He says he thinks we'll get Senate approval of the bill by this afternoon. Oh boy. So there you go. We got the dollar at 96.5 and the 10-year yields below 4.2. There's been a lot of talk about the Fed potentially finally giving us a rate cut, and we're seeing that priced in here. anything that takes that off the table is very likely going to send us back to the upside into, 4.35, 4.38. At this point, it's not exactly where we're at. It's how fast we got there and how fast we're going to move out of there. Rate of change is oftentimes more important than what number we're on. Same thing with the dollar. It has been a significant move from 99.5 to 96.5 in just a short period of time. We say short period, but that was the 23rd to July 1st. Imagine getting back up there in a day. That would be a significant rate of change. So it's very likely going to be these two units that move the markets, and it's very likely going to be the headlines from the bill or the tariff that move these two that move the market, right? We still have the volatility trigger and a zero gamma within focus. Hold on. Wrong market. There's the put wall. Put wall and volatility trigger in focus. Call wall 6287. And we left zero gamma far behind. Just focus on that zero gamma for the moment. It's really the perspective of the guidelines that we have to work with. We need to consider how the dealers are going to respond if we try to break out like we did yesterday afternoon, for an example. We tried to break our own Globex high and get an expansion to the upside, and dealers were selling into that strength, and we came back in again. When we got too low and we started to break down, they bought into that weakness, brought us back in again. That's what they do when we're above the zero gamma line, right? That's the behavior that they take. They're not trying to move the markets per se. They're just hedging their accounts, trying to remain at a zero delta environment. So if or until we get back below the zero gamma line, we're going to expect these narrower days without big blowout moves, right? You can see how the size of the candles have gotten smaller and smaller. That's the market dynamics when we're above the zero gamma line. Rolling the put wall up is a bullish behavior, but with the call wall so close, we don't have a lot of room to really expand higher before we hit the level where we would expect them to monetize those calls. So that's our range to work with, 62.90 to 62.20, 70-point range. GTFO, we got to get out of this box. The put wall is really close to the 4-period daily moving average. So on the right chart here, we've got that 4-period right here, 62.18. As long as we're above that line, there isn't a short. And even if we get below that line, the 10-period would be the short target. Of course, if you could get through the 10, then you've got the 20, right? If you got through the 20, then you've got the 50. We're just getting a 5,200 cross finally. But if you look at all the tools that we would generally look at, Mag 7, growth versus value, weighted versus unweighted indexes, the VIX, bonds, treasury, dollar yields, there is no short signal out there at all. The only short signal out there is, gosh, we've gone a long ways to the upside. Yeah, well, okay, but that's still not a short signal. We're barely down this morning, so we're no closer to either one of these ADR lines. It's the average daily range. Right now, the average daily range is around 70 points. If we were to split that in half from where we opened at the Globex, we could move 35 points in one direction, 35 points in the other direction, and that would be our average daily range. To get to either one of these sides today, we would need to break out of yesterday's range. That's not always the case, right? A lot of times, at least one of these guys is close enough to hit within the previous day's session, but not today. So we need to GTFO, get out of this box to get to one of those two lines. Simple enough. Without headlines, there's no expectations that we're even going to reach those lines, let alone exceed them and get, say, a full ADR in a single direction, which would get us to the yellow lines on the upside or the downside. We got nothing until we get the headlines, bill or tariff, one or the other. The distance from the weekly pivot, which we talked about a little bit yesterday, we tried to exceed that distance yesterday afternoon. We didn't get very far, and now that is the line in the sand. If we get above that level, how much farther can we get from this weekly pivot point before too much is just too much? I don't have an answer for that, by the way. I correlated and measured and sought some sort of uniform level, but haven't found one yet. I know we can go farther away from it to the downside than we can from the upside. To the downside, we can exceed 6.5%, 7% away from that floor pivot in a week. To the upside, 3.5 is about the average. And when we measured this yesterday, we weren't quite at 3%, but we didn't have that push up yet either. All right, there's your 2% right there. So another 1.5% higher than that would very likely be the extreme on the week. And remember, it's a short week, so we have to kind of dial back our expectations. I think 3 and 3.5 on a short week is probably too much. Today's floor pivot is really narrow channel. A narrow channel implies that if we break out, the breakout can stick and we can really run. We would need to break out first. And what we're looking to break out of is yesterday's range, that box that I drew just a few minutes ago. Until then, we no longer have an MDP. We had 2 in a row. It's a missed daily pivot. We didn't hit the pivot on Friday. We didn't hit the pivot yesterday. Those are both daily pivots, and we missed them. That's an MDP. But we hit today's. So the count has ended. Since we had a relatively narrow range yesterday, the SNR lines for today are tucked in kind of close. But we still need to exceed yesterday's range to hit either one. So not only are the ADR lines outside of yesterday's range, so is the SNR1 levels. We need a breakout to get into any of our pivot points, any of our measured moves. To get anywhere today, we're going to need that breakout. And the thing is, without the headlines on the bill or the tariff, I don't see how we're going to get it done. So it's very likely that if we do get a breakout of either side, that it's fake and that we come back in again. Look for 111 and or 1236 reversals off of the high or the low. And you know, we've seen it before, so we can see it again. You can break out of both sides, break out of the high and then the low, or vice versa by the end of the day. So far this week, we've been developing a very tight range. We've got a centralized distribution that looks really clean. It's classic pattern. as opposed to some of the trash we've seen in the last few weeks. So, really tight bundle. If we break 6230 cog line, we'll aim for that point of control of last week. There's a little distribution around 6200, but that's not a surprise. It's a big around options level. 6192 cog line, 6211, all of those are going to tie up around these two higher volume nodes. But breaking that, or basically this pivot, sends us down to the point of control. It'd be around 6150-ish. It does get relatively shallow, so the move should happen swift under 6200. Just keep in mind we're still in that positive gamma environment, right? So shallow or not, the dealers are going to be buying into that fall, and that will arrest the fall. $10-day, 30-minute volume profile with TPO, we're still above the point of control, and we're not expecting to wipe that point of control out anytime soon. The candles that made this point of control exist right here. We put the greatest amount of volume in the last 10 days at that spot during these few days. So all of this combined didn't match what we did right there. And that's because we stayed in a really tight range and just built it out. So we're contesting that with this new level, this 6232 area cog line that we're building out here. It would help if we could take some of these candles off the board, but we're not going to be there for at least another 7 to 10 days. So the only other way that we're going to see this point of control move is if we just put in the work and get it moved up here. We're not seeing a matching effort in the TPO. So what this is telling us is less trades, but those trades have a higher volume. No new VPOC today. We've crossed through yesterday's point of control multiple times. The distribution between these two are starting to line up. This is what we need to get out of, right? As we've been talking, yesterday's high, yesterday's low, that sets the range and sets the tone. GTFO, we got to get out of this box. Pretty simple. New month. So we have day one open range. That's DOOR. It doesn't really function all that well for futures, but on equities, it's really insightful. So you can do 1 day or up to 3 days. I kind of like the 3 days myself, but this is day one. On the week, we've got 63.10 basically for the upside and 61.32 cog line for the downside. And we're barely taking up any of this week that we've got offered. So plenty of room to move if or when we do get these headlines, but we're still waiting on the headlines. We're still above the 10-day and it's in a healthy space. We're not in the extreme. So any question of have we moved too far, too fast, and does it owe us a pullback? Nope. I know it's disingenuous because we've got all those big green candles pointing to the upside, and it seems like we've moved a long ways in a short period of time, but we're not extended beyond the 10-day. And if we're not extended beyond the 10-day, then it doesn't owe us any sort of mean reversion or pullback just because, which is a fallacy that a lot of newer traders get hung up on. Oh, it went 5 days to the upside. We have to go down now, right? Well, the market can do whatever it wants. and it must not have got the memo. Because we're on, what, day 7? Yeah. And even if it does turn into a doji day or a red day, if we close inside of yesterday's range, then we really didn't go down anyways. All that gave us is more time for the 10 to catch up to us. It'd be a sideways day, a correction day. We can correct in time or price. So going sideways means a correction in time. Looking at the 10-week, now we're getting into a little bit of the overbought, overstretched, traveled too far sort of logic, but we're backing off from the high that we set last week. So around that 5% zone, we've already started to back away. This wouldn't make us drop and crash and burn. It would be an indication that we've gone too far, too fast, and we need to pause, consolidate, take a breath, and or mean revert. Well, it seems like the market's taking a pause and taking a breath. Just like it should. We're still more than 4.25% above the 10-week, and that is just getting a little ahead of itself. We was looking for that capital rotation on Friday, and we still didn't get it. Top 3 are risk on, bottom 3 are risk off, 3 in the middle are the midline. There is a change to the system, and I just don't know what to do with it yet. Utilities are getting tied more and more to AI. So while utilities classically, historically has been risk off and belongs in the lower 3, it's getting tied to the upper 3 more and more with AI and data centers and uranium. And so I don't know. I don't know what to do with that. But even the top 3 aren't really the top 3 anymore. It's more chips than tech, generically speaking, and communications more than just tech. So, this concept is flawed anyways. Still looking for the capital rotation. If we don't get the rotation, we're going to get volatility, right? That's the way it works. So it's one or the other, and so far, we're not getting it. And we had Bitcoin down, but Hood was up on crypto news, so that was a little oddity. The hotels were getting a little bit of attention. MLCO, Win. So maybe look after the Macau casinos. Take a look in that direction. Airlines, a little bit of mean reversion after the shenanigans earlier in the week. Some of the utilities names like OKLO getting hit. Quantum down. The benchmark we use in the mornings is 0.5%, simply because I'm doing the morning briefing so early. When we look at names that are up or down at least 0.5%, we've got Nat Gas and ARC, Mag 7, uranium, consumer discretionary. Really, everything that was up yesterday is down today, 0.5% or more. Thing is, if we look at their 5-day change, they're still doing relatively well. Like Bitcoin, sure, it's down 1% this morning, but over a 5-day period, it's still up 2%. Mag 7 down 0.75%, still up over 2% in the last 5 days. And chips, they're not quite at 0.5, but even with that, they're still up nearly 2.75% in a 5-day period. So yeah, they're a little down, but not from continued repeated downside moves. Gold miners headed back to the upside with bonds, but bonds ain't there yet. We need more out of them. And the VIX, oddly enough, I wouldn't think that we're down enough to get the VIX's attention. Either way, 19 is the line in the sand. As long as the VIX is below 19, it's really not even worth your time or attention. This one always comes back to rate of change until we get above at least 19. So rate of change, if it's not moving swiftly, it's not going to help you out. Better off looking at something else. So VIX, gold miners, solar, that's a joke. Pot stocks and crude. You don't want a rally day based on pot stocks and solar and crude. So if we try to break out today and that's what we have, I'm gonna short that sucker. Expect the breakout to fail and to come back in again. Fake breakout, fast failure, play it back inside the range until we have another reason to break out. 0-day flows in the options, dealer hedging dynamics, headlines, something other than this trash. But for a breakdown, chips are barely down at all. Mag 7 just a little bit more than that. And it's very likely that they're going to stall out. So if they do continue to push to the downside, that could give us a little bit of weight and we could expand to the downside some. I wouldn't expect much. Just continue to keep your eye on the signals for a short. Because we don't have them. It's all about headlines at this point, waiting on news. The bill or the tariff, one or the other. It's a real simple day. Get out of this box. Yesterday's range. And if the breakout comes without headlines, then it's very likely fake and we're going to come back in again. So I'll be looking to play the reversal off of the orange line or the green line. That's the 111 or the 1236. All right, simple enough. So I got for you guys, be careful, be safe. 10 o'clock, watch the clock. We got economic data coming in, and I will see you guys tomorrow.